knows if you come off and ask a question. Couple things on our side. First, if hopefully some of you had a chance to join our first of these in the session that in the order that we're doing. My partner Mary led the first one. We actually have a recording of it if any of you weren't able to join, and I think I think Steph Rand is probably going to put it in the chat for us. So if anyone wants to watch the first version that we did that Mary led, please take advantage of the recording and feel free to do so there. Today we're going to talk about a totally different subject, so it is a completely different presentation and a completely different thing that we're talking about. I do want to give everybody just a quick overview of Bread and Butter Ventures for those of you that might not be familiar with us or familiar with this series that we're doing. But Bread and Butter Ventures, we're a largely seed stage venture capital fund based in Minneapolis, Minnesota, in the Twin Cities. We invest in three core verticals. We invest in food technology, which is the vertical that I lead. We invest in health tech, which Mary leads, and then we invest in enterprise SaaS, which both of us play a role in. Like I mentioned, we're a seed stage fund. We typically write around $1 million checks into companies and target about 10% ownership when we invest in those companies. We're geo agnostic, so we do invest anywhere in the food space. We're focused on software and robotics, maybe a little bit of deep tech, but pretty much software and robotics. Since we don't do any CPG, we don't do any stuff that goes, we don't do anything that goes in the ground or in your body, I always say. In the health tech space, we don't do any pharmaceutical and we don't do any med device. So it's also largely a software focus. And then in enterprise SaaS, obviously, largely software focus. I'm actually going to have Steph and Anna on the team also come off mute quickly and introduce themselves. We're a small team, so we're a team of 4. And so I want to have Anna and Steph quick introduce themselves.
Hi, I'm Anna. I'm the executive assistant.
And I'm Steph. Sorry.
Now neither of you are unmuted. You guys are, yeah, crushing it, Steph. You're still muted.
Well, we're in the same room. Hold on. There we go. I run our post-investment support at Bread and Butter.
She's a partner and platform. I don't think anybody could hear that from. I think you guys were muted when you said that, Steph. So Steph is our partner on the platform side, so investment support. So that's our 4 people. So I'm going to dive into a few slides, walk through presentation. In general, y'all, I like things conversational. If anybody has any questions, feel free to stop me in the middle of the presentation. I'm happy to go deeper into anything that's interesting to you all. The whole purpose of this presentation is for you. So, we really are like hoping to help and add value. We are going to send out the recording afterwards. And in that email that goes out to everybody that's attending afterwards, we'll also have office hour links for our team. And so anybody can sign up and they're specific to the series. So anybody that wants to grab time with any one of our team members, there'll be different links where you can grab time with us there as well. So that'll be in the follow-up email where you'll be able to grab time, one-on-one time with any of us for sessions as well. So if you have any further questions, and then we did have a variety of questions submitted prior to the presentation as well. Some of them actually we will cover as we go through, and then some of them, if nobody has questions at the end, I can use those as I can go through and answer those questions. But I'm pretty sure we're gonna fill all the time, and like I said, just ask questions. I'll try and save enough time at the end for specific questions about your companies or general questions about metrics or anything honestly in the venture capital world. Quick background on me: I was an entrepreneur for a long time. So I built several companies. The first 2 I bootstrapped and didn't raise venture capital for. The third company I raised venture capital for, and I sold 2 of them, and I ran one of them into a brick wall and failed completely. So I've had a variety of the experiences from taking a company from idea to exit, and also from idea to raising capital to losing a lot of people's money that I respect. So I'm happy to share anything within that realm or stories as well. Okay. Anything else before I start? I know that was a long preamble. I appreciate you all sticking with me. Okay, I'm gonna go ahead and share my screen. All right, can everybody see it? You good? All right. All right. So here's just a couple of the things that we're going to cover, just a quick agenda of the things that we're going to go through today. And I think those of you that did submit questions ahead of time, I think you'll see some of those areas are going to get answered while we go through it. Why I use metrics. And so I love metrics. Anybody that knows me or has worked with me or has been around me from a startup perspective knows that I absolutely love metrics. And I think that they're a vital part of the startup world. Um, Here's like all the reasons I can think of why you need metrics. And the underlying like factor in all of these is they kind of give you guardrails and guidelines. And one of the hardest things for people that I have found, and for me when I was running companies in like of being an entrepreneur, is you go your entire life and people tell you how you're doing. You're in school and you get grades and you get graded. You go to work for another organization and that you have regular reviews and you get told how you're doing. You take tests, you do all this stuff. You're always getting graded. And when you go to run your own company or you join a startup, there's not any of that. It's really hard to get feedback on like, how are you actually doing? Am I a high performer? Am I a low performer? Where do I fit in the stack? And the best thing I've ever been able to think of as far as like a replacement for that you can use to drive your business forward is metrics. And if you're intellectually honest and you select good metrics and the right metrics and you track them appropriately, all things we're going to talk about today, they can provide some of those guidelines and guardrails for you, and process for you as you go through your entrepreneurial journey, as you build whatever it is that you're building. And so it's for all of these things, and they have uses in all of these areas. But at the end of the day, they provide some process in what is like generally a very unprocessed thing, which is entrepreneurship. Um, a very like open, you can do anything and work towards anything thing. So hopefully that makes sense. Um, a couple quick like on each of these bullets, like manage what you measure. Like I'm a firm believer on if you're not measuring things, if you're not like checking data, using data, like how do you know how you're doing? So if it's marketing, if you're not measuring CAC, if you're not measuring spend, if you're not measuring the performance of things, then you don't ever know how your actual performance is going. And so you need to really, really measure everything that you're doing in order to understand if you're going the right direction. Intellectual honesty. And so this is a really important thing for startup founders. We tend to be really passionate about our ideas. We tend to really think that nobody's running a company where they think their idea is stupid, right? Like um, every founder I've ever talked to thinks that the startup that they have and the idea that they have is like the next best thing and the next big thing. And that's great. Like that's one of the things that makes entrepreneurship amazing and wonderful. However, we can also trap ourselves and fool ourselves. And I found myself doing this a lot when I was running companies where it'd be like my company that didn't end up working, I ran it for about 4.5 years before we put it down. And there were times where like I think I knew deep down like it wasn't going well and it wasn't working as well as it should have been. But I was fooling myself into, oh, maybe just this one more thing, or this one's kind of going well, or this thing's kind of doing the right thing. And the best way to prevent yourself from, trying to like fool yourself or lie to yourself and be intellectually honest is having metrics and set goals. How are you working towards those goals? And if you're not achieving the goals you set out for yourself, you have to have real conversations or real understanding of why. What's the why behind it? And is this thing still viable and feasible? It's not just negative too. It's also if you're doing really well in something, the numbers tell you to put more money into it, more effort behind it, right? And so it can go the other side too. And like this is really working. We need to put more. We need to put more. We need to put more. The only other thing I found from like an intellectual honesty standpoint is make sure you surround yourself with people that aren't afraid to tell you hard truths, be them positive or negative hard truths. That's another great way to help with the intellectual honesty thing. Alignment, and this is really important. And I know that there were some questions around like solo founders and just one person working on their companies right now. And alignment, the best way to drive alignment in an organization is by setting goals and then measuring your progress towards those goals. And so using metrics is the best way to drive alignment within an organization, even if it's just one person. Um, the earlier you start with metrics and using KPIs as a tool for your organization, the earlier you're going to have that process in place. It's going to become a part of your culture. It's going to become a part of the company. It's much harder to implement when you have 100 people than when you have one person or when you have two people. And so I would really encourage you, even if it is just the founders, that you do start putting KPIs, tracking KPIs regularly, setting those goals, and tracking towards those goals on a regular basis, and then reporting against them from the earliest stages. Like even if you're a solo founder, you have like an advisor, you have somebody that cares about you out there and cares about what you're doing, report to them, even if it's not an investor. Talk to somebody, get somebody to be like, hey, I'm doing this on my own right now. I'm setting goals and objectives for myself. Can we have like just a monthly meeting or a weekly meeting where I just tell you how we've done and how we've performed against them, to help hold yourself accountable? And that also helps with the intellectual honesty piece. And so that alignment is like that. If I had to highlight any of these, alignment would be my number one thing of why metrics matter so much for your organization, is the alignment piece. The Just to give you like another little story, in the startups that I ran and what I recommend for our portfolio is that you do a weekly stand up where you report on the core KPIs for your organization. And so, usually you have like 3 to 5 high level company wide KPIs that are the most important metrics that you're managing and monitoring for your entire organization. And every week, I would do this. I would actually stand up in my office and I would say, here's the 3 or 4 high level KPIs. It's revenue or retention or whatever they are. Here's how we did last week. Here's how that compared over the last several weeks with a graph. Here's what we expect them to be this week. And so I would report on a weekly basis. We would do just quick regular stand up, and then as you get leads of different teams within your organization, so if you have a CPO or a chief revenue officer or whatever, I would have them report on their organization's KPIs. And you actually start getting this like KPI pyramid or this metric pyramid where like your sales team might have like 4 different core KPIs and they funnel up to like 1 or 2 of the company-wide KPIs that are really important. And so it really helped with accountability. It also helped with visibility across, like, here's what everybody's working on. Here's how we're performing across the entire organization. And it's not like we were 100 people. We were 10 people doing this, or 11 people doing this at when we first started it, and we did it weekly. We would also set weekly objectives. And so we would set weekly objective of which is what's the one most important thing that as an organization we should accomplish this week. And so, you might call it OKR. We call it a big rock, whatever it is, whatever you want to call it. What's that one core thing that you need to get done this week? And your KPI should tie to that and should lead you to that. And again, it really drives alignment within the organization. If everybody knows the most important thing is closing this customer or pushing this product feature, then everybody is going to work towards that thing. If what I found is like with high performing people and people that are really smart, like we tend to all think we're working on the most important thing, but we might find one thing, we might not all align on what that is. And so in your organization, you might have like 5 different people working on different things because they think it's the most important. And so having that continual conversation around here's the most important thing. Here's the most important thing. This is what we should all be working on. If you're not working on this, we need to have a conversation and understand why. Why do you think it's not the most important thing? And so that's the one metric that matters the most. We'll talk more about that in a minute. For investors, so I'm not a believer that you should ever do anything just for investors that takes any significant amount of time. But we're going to talk. We have a whole slide on like how to use metrics for investors. But by monitoring and managing and having the right metrics, the ones that matter for your business, it is going to make your investor conversations so much easier because you're going to know them by heart. You're going to have them down. You're going to have done work on understanding what are those core metrics that matter for my company. And so when you go talk to an investor, you'll have a lot of confidence in it. When you get asked those questions, you'll be able to crush it. And there's no better way to tell a story about your startup than through data. You can tell the flowery, paint the picture, but till you have data to back up your picture, it's not going to hold as much weight. And so having, a really great handle on your metrics will help you tell that bigger story that you have to have when you go to raise capital from any investor. Metrics help you find the levers. So marketing is the easiest to talk about here. When you're doing, if you're spending marketing in 3 different channels, you're doing, digital marketing, you're doing, digital Google ads, you're doing influencer marketing, you're doing out of home, like billboards and stuff like that. You're doing whatever, any of the direct sales, any ways you're trying to sell. If you don't measure and you're not using metrics to see how they're going, you don't know what's going well. And what I used to like think, the way I thought about marketing and like where to deploy, and we all have like limited amount of capital for sales and marketing. The way I used to think about it, I was literally just put a list together of like just using my gut. Here's the 10 things I can think of to drive revenue or sales for my business. And I'd just write them down on a piece of paper. At the time, it was Excel worksheet, and then it turned into a Google sheet eventually. And I would like go to the top three and say, okay, we're going to test these top three for, a month or 2 months or 3 months, and we're going to spend $3,000 a month each or whatever your budget is. And then I would measure. And are they performing? How are they performing? Is it working? And if the ones that were working, I'd keep going and I'd put more money into. The ones that weren't working, I would cut and kill and get rid of them. And then I'd go to the next one on the list. And so measuring, you have to measure to find the levers, and levers really matter when you're really trying to get to scale. And so you're never going to get to scale company and raise a lot of money and build a big giant business if you can't find channels where you can put a lot of money into. And if where they go, take $1, turn it into three, or $1, turn it into four. So you have to find the levers that can move your business forward in a variety of different ways. That can be on your ops team, that can be on your product team, that can be on any team. Amy, I see your question about specific examples of metrics. Have a whole bunch of them coming. I've got like 5 slides of specific examples of metrics coming later, if that's okay. Um, and then accomplishment and celebrate, right? These two are tied together. Like, how do you know if you've actually accomplished great things or done things that you want, unless you have goals, objectives, and measure your path towards those? I was never really good at celebrating in our organization. You have to be careful about celebrating too much, because it is you can fool yourself again into, we made it. We raised our Series A. We made it. No, you didn't. You just made it to the next level. I always think about startups as like a video game, and like you have to pass the levels to eventually IPO to be successful, to sell the thing. And so I love so it's okay to celebrate when you pass a level, but make sure that you keep it in context of like, hey, we did a great job. We crushed it. We hit our OKRs. Our metrics went where we wanted them to go. But now we like unlock the next level, which is going to be even harder. And so it's okay to celebrate. You should celebrate with your team, even though it's not really ever been a strength of mine. But knowing when to celebrate should be based on like the metrics and objectives that you set out. All right. Any questions on any of that stuff before I move on? Okay, cool. What is a metric? So what makes a great metric? So here's the 5 things I can think of that make great metrics. Has to be understandable. And so sometimes I'll get pitched by a founder and they'll tell me like, I'll ask like, what are a couple of your core metrics? And they'll give me one and I don't understand it. And if I can't understand your metric, what about a new hire you make? What about, a key stakeholder, a customer, or an advisor, or a friend that's trying to help you out? So if it takes more than one sentence to explain, it's probably not a very good metric. So your core metrics should be easily understandable by everybody in your organization, from top to bottom, from your most like, green recent hire to your most senior level person. Everybody should be able to understand every metric that's key to your business. It should be comparative. And so you need to understand the direction it's going. So if it's a metric that you have nothing to compare it to, and obviously you have to get a start and you have to have a baseline, but you need to be able to compare it on a regular time basis. So I gave you the example of weekly, which is what we would do in our company. In some cases, some metrics might be better measured monthly or every 3 months, but it needs to be comparative. Ratio versus rates, and ratios and rates. And so think about like growth rate. And so if you want to build it exponentially, a business that grows exponential, it's not, we added, we added 1 user last month. It is, we grew our user base by 10% or 20%. We care about growth rates versus like totals. Totals tend to be really bad metrics. So, we have 100 total users. So I don't know if that's good or bad. We grew by 20% and now have 100 total users, right? Okay, you grew by 20%. That's great. If you can maintain 20% growth month over month, that's awesome. It's much harder to maintain growth rates than totals, than grow it in some sort of like linear model. They have to be actionable. So there's no purpose. Everything I just said, like, right, the whole purpose of metrics and goals is to do things with them. It's to find levers. It's to understand if we're doing better. It's to create alignment. So they should be actionable. And the best metrics are actually going to be leading indicators and not lagging indicators. And depending on the stage of your company, those might be different things. Those metrics might be different things. And so, you want to find the metrics that you can act on quickly. And so if you're monitoring and managing your digital ad spend and your conversion rates on digital ad spend, you want to say, oh man, our conversion rate just dropped from 2% to 1% over the last week. Like, what's going on? You can immediately go take action on that metric and go see what's going on and change something. affect change in your business. So you want to make sure that your metrics are actionable, the metrics that you pick for your company. And then you want to have them tied to a goal or milestone. I've alluded this to a lot already up until this point, which is you want to make sure that if you set a monthly goal, an annual goal, quarterly goals, wherever your goals are, you want to make sure that your KPIs are tied to them. So if your annual goal is a certain is a conversion rate, you want to have a 5% conversion rate by the end of the year. You want to be tracking things that might be leading indicators of whether or not you're going to hit that. So it might be conversion rate, it might be a variety of other things that you're going to be wanting to track. So you want to have all of your core KPIs that you track on a daily, weekly, whatever basis tied to those longer term goals, and they should all work together. This one's really important. No vanity metrics. And so this is where like you get into trouble with metrics and you fool yourself. You fall into that trap of like intellectual dishonesty, or you think you're doing well, but you're not. And so my favorite example of a vanity metric is if you have like a direct consumer app, people tout the number of downloads that you have. Like, I don't care how many downloads you have because a download doesn't really matter. What matters is probably an active user, an activated user. And so you could have this app and you could have a million people download the thing and maybe 10 of them are actually using it. I'd much rather have a company where I have 100 people that downloaded and 95 of them are actively using it than where a million people downloaded and 10 are using it. I'd much rather have that 195 ratio. And so number of downloads could very much be a vanity metric that makes you look good, but doesn't necessarily actually mean that your company's doing well. And so that's what a vanity metric is. Just really be careful of it and make sure that the metrics that you're choosing for your organization and your business are actually driving that business forward. They are actionable, right? They're all of these things. They're understandable. They're comparative. They're moving your business forward. So that's what, that's the check that you should always give yourself. Okay. So here's an example of doing straight line growth versus more a growth rate or a percentage growth. And so total, right? Sure, this one might be going up by one a month, but that's not really going that fast. This is like your total new registered users. So in this case, you'd say, okay, in month one, we went up by one. Month two, we went up by two. Month three, we went up by three. So we're improving our rate of growth in the second graph. So it's nuanced, but one of them, like you're never going to get exit velocity on this flat growth. Like, sure, it might be okay. Like it's not like bad. It's better going up than it is down, but like, who cares? We're striving for growth that is exponential. That is, the growth is growing faster. And so we're measuring things that drive us towards this side. And so thinking about like right metrics really matter and why do they really matter? And so you look at a company like this, and so it's revenue per customer is just the metric that we pulled out. And like, is this company actually doing well or not? Like, who knows? Just looking at it from here, it looks like it's kind of stagnating. It's kind of flat, right? This is one of my favorite things, and this is like if you guys take nothing else away from this talk today, I love cohorts. As looking at your metrics or your company as a cross section, cohort analysis is a really powerful way to do it. So this is literally the exact same company. So these metrics actually end up looking like this. They look like they're stagnated, right? When you look at them. But if you've never done a cohort analysis, I'll give you a quick explainer of it. It's when you take a group of customers or a group of users that all start at about the same time. So it's usually time. So you'll see like monthly cohorts, you'll see weekly cohorts. Most frequently, I'd say we see monthly. So cohort one it's all of the people that joined your platform or bought from you in month one. And then here's how much they spent in that first month. So here it's month one, their month one, they spent $5 in January. And then, cohort would be January. They spent $5 in month one. They spent $3 in month two. And so, their spend goes down as they've been customers of yours longer. Eventually, customers go away. And that's why you have a customer lifetime value. But all the people that started in January, they spent $5 the first month they were with you. Then three, then two, then one, then 50 cents. In February, everybody that joined your company in February or bought from you in February, they actually spent $6. And so they spent more the first month. Your January cohort, that same month, so these ones are interactive. And so your January, they spent $3. Everybody that started in that month paid $6. And then in the second month, your February cohort spent 4, which is $1 more than your January cohort was. So you're doing things to improve. You're getting better as an organization. Does that make sense? It can be kind of convoluted and sometimes harder to describe. And then if you keep going down, right? So basically, your January cohort, by the time you get to May, your May cohort of customers, you're all the way up to $9 on like a first order on revenue from the people that came in May. You've almost doubled what people spend with you from January to May in that first interaction with you. In April, your April cohort, the second time people buy from you, they spend $7 versus the second time people bought from you from the January cohort, it was only $3. And so in this organization, it really seems like you're doing better. It seems like you're improving. It seems like you're getting better over time because your cohort, the value of revenue per customer in cohort 1 is lower than what it was in your cohort 1, your May cohort. And so you can see basically trends of things, and you can use like cohort analysis for retention, for lifetime values, for customer acquisition costs, for all different kinds of awesome things. And the reason I get so excited about it is because like as a CEO and operator, like every day we're working hard to make our product better. We're working hard to, identify our ideal customers. We're working harder to understand like our sales process. We're working harder to improve our companies every day. How do we know if the different actions and things that we're taking are actually helping? Are we actually getting better? Well, let's take a cohort of our customers from the very first month we launched and then compare it to the second month and then compare it to the third month of customers. And you should see progress. And what's really cool is like when you're actually in the business, sometimes you'll know like, oh, we launched this awesome new feature in March, and you'll see a bump in whatever metric you're measuring between the February cohort and the March cohort when you launch that thing. We totally revamped our sales process and like what order we talk to customers. Well, you see like a bump in conversion rates, from the cohort where you launched it to the next cohort, you see a huge bump. And so you can actually see if the actions that you took had the intended effect on your organization through a cohort analysis. But if you just look at all of the data lumped together, it looks like this. And so if you're looking at this and you launch like a big giant, new feature in March, you're like, womp womp, didn't help at all. We launched in March and, like our revenue per customer actually went down in April. And so it looks like a big flat, like, nothing burger, which is not what actually happened. It actually worked because you start looking at the cross sections and your data looks better that way. So I love a good cohort analysis. I'm going to move on from cohorts, but it's like my favorite way to look at data. So if anybody has any questions, please don't hesitate to ask. Okay. Now I'm going to go through this stuff pretty quickly. The next 5 slides are really quickly. These are examples of most of the slides are examples of different metrics that might matter, but things to consider when you're creating the metrics for your business. And so no 2 companies are made the same. There are a lot of parallels between a lot of different companies, but no 2 companies are made the same. And so here's like the 5 things you want to think about when you're creating, like what stage are you? How big is your team? What's your customer look like? What vertical are you in? And what's your business model? So those tend to be the things that will drive what KPIs are right for you. And your KPIs shouldn't stay the same for the entirety of your business. If you're pre-launch with your product, your KPIs and your metrics are going to be very different than if you're, Series B doing $10 million in annual revenue. Your KPIs can and should change as you pass stages. So when you go from, product to MVP launch, they change. When you go from, or from product, pre-product to alpha, it changes. When you go from alpha to beta, it could change. When you feel like you have like a pretty good understanding of product market fit, it should change. When you hire out your first sales team, they might change. And so during all of these key elements or key different inflection points of your startup, your KPIs can and should change. Now you should be thoughtful about them and have like do a session on why and what's right at this moment in time for them. But they should change. So they're not set in stone. So like, don't worry about getting them necessarily wrong right away. Or is this one going to work for me forever? Because the answer is no. There are none that work for you forever. The closest one I can think of that works forever is usage. If you're a software company, like usage rates is the one metric that probably works forever, and is my favorite metric of any. Okay. So this is stolen. There's a couple slides that are stolen from Lean Analytics coming up. So if you want to like check out another resource on metrics, check out Lean Analytics. Really good resource for you from a metric standpoint. And so this is a stage thing, right? Like, and this is the way they define the different stages is like empathy, stickiness, virality, revenue, and scale. And here's kind of like how those tie into different potential business models. So you think about, you're going to combine these things if you think about it, where you have like your stage of your company and then the business model you have on a graph. And then when it falls underneath that, there's this where here's a whole bunch of different like metrics that might make sense for your company based on where you're at from a stage perspective and where you're at from and what type of vertical or what type of business model you have. You could get even more complicated here if you wanted to, and you could make like a 3D graph where you have also what vertical are you in, because if you're in food tech, your metrics might be very different than if you're in health tech. And so these are more generic, but they are drilled down for you. And we can also share out these slides with everybody too, so like you don't have to write them all down right now. So we're happy to share out these slides. And again, these are just like some examples of different things that might be useful for your company. And since we have a lot of people on, and I don't know every vertical that you guys are in and that you guys are working in and building in, then don't want to drill down or spend too much time in it. But here's a couple of different things, and we'll share these out for you. And there's a whole wide variety more. And at the end, when we have a little time, if anybody wants to like talk about their business specifically, I'm happy to like dive into what might be good KPIs for your company specifically. I actually find that usually helps the entirety of the group. Okay, and a couple more slides on like just specific metrics and that you can go through on your own when we send the slides out. I do want to quickly talk about I'll leave it on the slide first about usage metrics, because I mentioned usage as like my favorite metric for most software companies, and I tend to be able to find like some way to get a usage metric into most business types, whether you're a mobile app or you're doing two-sided marketplace or SaaS or like whatever, even hardware companies. I find that there's a usage metric out there for you, and here's why. And so what is a usage metric? So if I have a game, right, like a social, like a game app, if I like a direct to consumer app that's like a crossword puzzle, and I put a new crossword puzzle out every day, I would be really curious on like the usage of that crossword puzzle. I have 10,000 companies. How many of them actually play it every day? How many of them play it once a week? How many of them play it every month? And so usage is just how frequently does a consumer, whoever that consumer is, that could be a B2B consumer, that could be a B2B2C consumer, it doesn't matter the business. How frequently does a person use the thing that you built? And the reason it's so great as a metric is it's a leading indicator. So if you sign an annual contract for your B2B SaaS company, if nobody's using the thing, they're not going to retain. They're not going to stay a customer for the following year. If you have like month-to-month contracts, if people are using the thing, they're far more likely to not churn, to stay with you forever and for the long run. And so usage, if people are using the thing more than you expected, they're probably willing to pay more for it also. So it leads into pricing. So usage is my favorite leading indicator of potential churn, of potential contract expansions. It also tells you a lot about your product. Sometimes like you'll be monitoring usage and you'll think somebody's going to use it one way and they're actually using it a different way. And so how do you set like what's the right way to monitor and manage usage? Well, the right way to monitor and manage usage is like be truthful with yourself. How frequently should a person use your thing? So if you're TurboTax, for example, people probably are going to use it really, really intensely one time a year. Harder to measure how that's going to track over time, but like if people are really like using it intensely for like 24 hours in a year, that's probably really good usage for you. Really, really different from TikTok, where people use that hours on a daily basis. And if people are only using TikTok 24 hours a year, like probably not getting used the way it's intended. And you're probably going to end up with like not a super sticky product. You probably don't have product market fit. You probably need other things work to do. And so for your company, how frequently should your consumer be using your thing? Should they be logging in every day and checking data? Should they be logging in weekly to get a synopsis of the week? Is it monthly? Like, what is that? Like, what would your expected usage be logically? And then how are they performing against that? Are they outperforming it? Are they underperforming it? And then that really will tell you a story of like from customer success, from retention. If you see like usage drops, it's a great like ping. A lot of our portfolio companies actually will set up alerts across their customers where if they have usage alerts where if usage drops beneath like some certain percentage, their customer service team, customer success team reaches out to that customer to see what's going on because it's usually an indicator of something happened. If usage spikes, same thing. It's a ping, it's an alert where they can reach out to that customer and say, hey, what's going on? Might be an expansion opportunity, might be an opportunity to upsell, right? Might be an opportunity to ask for a referral because they're loving the thing right now. And so a lot of our companies will actually set up alerts on either side of usage to see if like people are falling off or people are joining in. And so anyhow, for me, usage is a metric that can start as soon as you have your very first pilot customer in your alpha software. Like usage is something you can start monitoring. Pre-product, obviously, you won't be able to. But once you have like your product in market, usage is a metric that I would encourage all of you to use. When I like as an investor, it's a question I always ask every company that I meet with. It's like, how's your usage? Um, so that's the one I wanted to do a quick deep dive in because I think it spans across a lot of different verticals, a lot of different industries, and every stage pretty much. I'm not going to spend any time on any of these, but they will be in the slides because these are kind of like some like deeper dives into different things that I don't might not be pertinent to everybody on the call today. This is getting a little bit deeper into like the marketing stuff I talked about earlier, like rate channels against each other, optimize. That's what this slide talks about. So I already kind of went into this stuff. These are some growth metrics around like landing and expanding, activity, totals always go up. Don't those are like can be vanity metrics. Retention, churns, and cohort. We've actually talked about some like the cohort for sure. Um, beware of churn, retention, understanding those things. Like don't forget about like when you go from like a Series C to Series A startup, from Series Seed, you're so concerned on like new customers, new customers, new customers, where like sometimes like your best opportunities are to expand within your existing customer base, but it depends on what kind of company you are. Um, Most important thing though, throughout all of it is continue to have like leave customers in the loop. And so this is from the earliest stages when you're still just building products to the latest stage companies in our portfolio. You have to continue to keep customers in your loop and continue to make sure that you understand what their needs are, how their needs are changing, um, and how you can continue to fulfill and serve those needs. And so it's never dumb to talk to customers, no matter how many metrics you're using and driving. Like, don't get so stuck into your metrics where you forget to like talk to customers, where you forget to work with customers, you forget to include their things in your future revenue plans, your future marketing plans, your future product plans. So don't forget to talk to customers. I can't, yeah, I can't emphasize that enough. I love on the product side, if anybody on the call is like thinking about starting a company or pre-product launch, um, if you're ever not embarrassed by your software, your product, the first time a customer sees it, you've overbuilt. And so that is a real common like mistake. If you are post-launch and you have some customers using your thing, when you launch your next feature, if you're not embarrassed by your next feature or the next rollout a little bit. If you think it's perfect, you definitely overbuilt the thing. Um, and that's usually you're not keeping the customers in the loop enough. Customers know what they want better than we do in most cases. And so keeping them in the loop is a really, really great way to increase your chances at success, no matter like how many metrics you're tracking. Sorry, it's a little bit of a side, but I was included in here. Let's see, there's a couple things in the chat. Uh, okay. Tools platforms to streamline KPI reporting. Uh, Kathy, there's a variety of them out there that you can use to like monitor, manage different KPIs. I actually don't have a single favorite one that I would endorse. Steph, do you have any in your world that you see a lot of our portfolio using? There's so many out there like to manage and monitor and use for your KPIs. I don't have a favorite. Okay. Sorry on that one. Not super helpful. Malika, I don't know when you asked the question what I was talking about. But at the alpha stage, how do you get this metric? So I'm not exactly sure.
Hey,
Um,
hey, Brett, sorry. I was just I think people often think they're using products in a different way than they are. So at the earliest stage when you have those pilots, and I think you said just ask, but I do think sometimes when I ask, people are saying they either feel badly telling me or they're like, how do you get an honest answer on how much someone is using it? You know?
yeah, yeah. Hopefully, for software, hopefully you can actually like monitor. There's something built in where you can like say how often did they log in, how often did they do take this action or do this thing. It's a really good question because it's also like when you're getting that or launching that alpha thing or that first thing out, like build into it some way to like monitor usage of your software. If you're more like physical goods or physical good products, it is a couple different ways you can do it. One is you can ask and you can like hopefully get real answers and ask hopefully people that have relationships with that will give you like the truth, the true truths, the total truth. The other way is like if it's physical product, how often do you need to like how often are they buying? And so then you can kind of extrapolate to how frequently they use it. So if you sell a bottle of shampoo and you expect the bottle of shampoo will last a month, are they buying a new bottle of shampoo every month? Or are they buying a new bottle of shampoo every 3 months? And so when you think about like your expected usage, you can kind of determine like what's your frequency of use for that physical product, or like what's the useful, you might have heard of the term, like what's the useful life of a product. And so whatever you think your assumed useful life of your product is that actually how long your customers are using it for before they have to get a new one or a new thing? So those are a couple of different ideas, like the earliest stages. Um, yeah,
Awesome.
yeah, and be careful like when you are asking for like individual feedback, like from people, it is so true that people tend to like to tell you what they like to hear, and so you have to caveat any. It's like actually one of the reasons I really don't put much stock into any type of polls or like you send out like any type of like data collection via survey data like at early stage like I find that it's not super useful. I like if you're gonna spend the time to do that, I would tell you just to go talk to your customers instead and have like the questions that you think matter, set up questions that you think matter for your organization at that moment in time, and ask those questions at that moment in time.
That's awesome. Just as a quick follow-up on that earliest stage, is there a product like software tracking thing, usage one that you recommend?
Mhm.
Do you
Go
have
ahead.
like a tool
Oh.
that you recommend plugging into the back end of the product at that earliest stage, like not super complex, just looking for like general usage?
Um, I don't. There's we have at super early stages. There's a couple of different ones that people do use for like measuring analytics. I'm blanking on their names right now.
Don't worry. Awesome.
Mixed
That's
panel,
okay.
mixed panel. There's a couple others that people use. Usually people haven't plugged them in at like the earliest stages though. Usually they just have some way to like track like on their own back end or built in on their own back end, or if you built off of like another platform. Um, Usually they have some sort of like gauge that you or way that you can actually check and test or see usage.
Awesome. Thank you so much.
Yeah, uh, sorry I wasn't more helpful with that one. Okay, this is kind of the last thing we're going to talk about quickly is like using metrics to tell an investor story. And so my number one piece of advice is use visuals. So as you're putting together your deck, your pitch, whatever, sending out like if you're even monthly updates, right? Um, Sending out like a moment in time snapshot of your company is not helpful to anybody. So like telling me how you did last week or last month or last year, like I, we did $3 million in revenue last year. Great. Congratulations. Did you do 6 million the year before, or did you do 500,000 the year before? And so one of the most important things you can do when you're using your metrics to tell your investor story is show how they've changed over time using a cohort analysis, using graphs, using like a sales funnel and how your sales funnels changed over time. Um, Using a Gantt chart for like product. There's a wide variety of different ways you can show some of the milestones you've hit. You can show how your metrics have changed, how your KPIs have changed over time. But they need to have changed over time. Remember, like one of the first things we talked about was like a great metric should be comparable, and that's actually like what makes them good or bad is, are you getting better or are you getting worse? And that's what's really interesting to an investor. So when you talk about like different stages of investment and like where do you need to be from a metric standpoint to raise a Series C, to raise a Series A, to raise whatever, um, part of it is like that total top line number. Part of it is, and just as important, is actually how you've grown to get there. Are you growing 5% month over month, or have you grown 25% month over month? And like the real metrics that you need to achieve to unlock a next stage of capital is a combination of the both. And in general, for like early stage investors, we prefer high levels of improvement of growth rates over high totals number. Because remember, like totals aren't, we don't care about totals. We care about like your rates of growth. And they tend to be far more predictive of the future performance of your company, is how you've performed and how you've grown recently than what your totals are. Like when I first started thinking about investing and first started investing, I used to get like a bit starry-eyed around totals. Oh, we're a $3 million company. I'd get really excited about it. And I quickly learned that that didn't really matter. Growth rates mattered a lot more at the earliest stages. And so when you're telling your investor story, use metrics to tell your investor story. That will make you far more interesting than without it. But make sure you do a really good job. If you've got some really cool metrics, lean into those really good metrics. Um, all right. And then last thing is that, remember, like measured failures are also really good. And uh, I talked a little bit about this in the marketing context already, where we would measure our different marketing channels, and if it wasn't working, we would kill it. Well, if we weren't measuring it, we never would have known that it wasn't working, and we wouldn't be able to shut it off and save money or reallocate that money to a channel that is working to find those levers. And so don't be afraid or don't be disappointed or don't be distraught when the thing that you're measuring isn't going the right direction. If the thing that you're measuring isn't going the right direction, that's actually awesome, because that means that means you can go and you can try affect change. You can go try and do something different. So metrics that measuring your metrics is something that's really, really important. Okay, so that's everything I got from a slide perspective. Does anybody have any questions on anybody here live have any questions? You want to ask? You can put them in the chat, or you can just come off mute. Nothing? All right. Let's see. Oh, yeah, Amy, please.
So I'm new to this. So you're looking at lots of business analyticals, and I'm coming from the people side. Like, what are you measuring on the people side? Because I'm thinking about things like organizational culture, um, thinking about maybe some of your human resources or organizational development kind of stuff. Does that
Yeah.
factor into any of this at all, or is this
No, it
maybe
does. I
I'm
mean, like
off?
culture, like when we're evaluating teams, like one of the things we're trying to evaluate is culture of the team, and do they fit culturally with
Mhm.
us as an investment firm, because it is a long-term marriage. That being said, like most, a lot of times you're starting with one person or
Mhm.
two people, and at that moment in time, it's harder to measure like culture. There's a ton of like out of the box software tools for um, understanding team health and understanding and monitoring, team happiness, team health, team performance, team productivity that are out there. And those 100%, as you start getting into a larger and larger organization, could be one of like your core company KPIs is team health, team performance. And so as you go through like kind of the different stages of company that we talked about earlier, that might be one of like the 3 to 5 core KPIs that's really important to the success of your organization, is the health of the people within your organization from a variety of different standpoints, mental health. And we do see that within our portfolio, where companies will monitor and manage team health, if you will, from a KPI standpoint. You usually don't see it as a core KPI when it's the 2 founders or the 3 founders. And that's a lot of like the stage that we deal with is tends to be those types of stages, those really early stage companies, where it's more business. It's something having to do with you know, outside, external part of the business versus the internal part of the business. but you can treat it in the same way. Same thing with like product. Like, we didn't talk a ton about like the tech side, and like building product, but same thing. Like KPI should be applicable and should like be a big part of your tech team and how they build products, and how they push software to market. Anything else? Anyone else on that's on have any questions they want to ask? There was a couple. I'm just gonna pull up the ones that came from earlier. Um, one or like a couple milestones. Somebody asked a question about like milestones and metrics to hit to raise different rounds of capital. Um, one uh, is like, so to hit a seed stage, if you're like a SaaS company, I'm just going to use like SaaS metrics right now. But if you are a SaaS company and you're trying to raise a seed round right now, most seed rounds from a SaaS perspective are going to be doing something between like 20,000 a month in revenue to 60,000 a month in revenue, and have maintained, 20 to 25% month over month growth rates for the 6 months leading up to their round. Um, and so kind of that range is where we're seeing a lot of seed stage deals go off. There's there's a lot of variability in pre-seed. It's really hard to peg any type of metrics to pre-seed, so I'm not going to try. For seed, there's still variability in that. For Series A, as you get later stage, the variability becomes less and less. For Series A right now, most of the companies that are raising Series A's are approaching $3 million in annual recurring revenue and have maintained 20% month over month growth rates to get there. And so that's kind of the SaaS world. If you're like a product company, or any type of like GMV company, a quick like little cheat, it's not perfect, is where like if you're selling Busy Coffee, which is a company in our portfolio, which isn't SaaS, they don't have margins like SaaS. Let's pretend that their margins are 50%. To hit that Series A metric, they would need to get to 6 million in total revenue, and their gross margins are 50%. So you'd be hitting that 3 million in recurring or 3 million type level. And so you can kind of use what your gross revenue is as a tie to SaaS, and that usually holds pretty true in different organizations. Um, okay, Megan just asked, what are the top metrics investors typically care about? Depends on stage. People do care about revenue, obviously. People care about growth rates. I care a lot about usage. I think good investors care a lot about usage, and especially at the earliest stages, like pre-seed, seed stage. I think usage is more predictive of future success of a company than like your revenue, because usually we don't know like how to price things yet. We don't know how to do a lot of things. From a revenue standpoint. So usage tends to be a lot more predictive of future success, in my opinion. Um, yeah, those are a couple of quick ones that come to mind from an investor standpoint. Good investors care about what are the metrics that make the most sense for your company and how are those doing. And so if you have like the 6, 3, or 4 or 5 metrics that you think are really important for your company, that's awesome. Make sure if you pick good ones, like those should be the most important metrics for an investor as well. Any last questions? Yeah, hey.
Could you comment on sales cycle, like how long it takes to make a sale?
Really depends on who you're selling to.
Yeah.
So it's really hard to like pigeonhole it into one thing. Enterprise sales, like we have some companies that do like really, really large enterprise sales where it could take as short as 6 months and could take as long as 2 years to close somebody. And so, if you're trying to sell to enterprises, if you're selling direct to consumer, like sales cycles could be minutes, could be, hours or days. And so it really does depend on who your segment is. B2B sales take longer than B2C sales in general. And in general, like bigger businesses that you're selling to, the longer that they take to acquire something. Is a 3 million ARR based on high operating costs? No, that's like a traditional SaaS, like normal SaaS company, maybe. Like that's what I would expect in like a company that has like normal SaaS margins, like that 75 to 80% like gross margin, from a SaaS perspective. Cool. Thank you all for joining. Hopefully this is helpful in some way, shape, or form. Hopefully we can be resource if you need it. So we're gonna, like I said, we'll follow up with email with office hours. So feel free to grab time with any of us, and hope you guys all build like awesome, wonderful companies.